Hello everyone, I am Pratap here. We are at part 3 of lesson 12. This lesson is having dependency on earlier lessons. In case if you directly get into this lesson, I request you complete the earlier lessons. And all the lessons are available at our playlist Supply Demand Zone Price Action course, and you can access the link to the playlist in this YouTube video description. And in this YouTube video description, you can also find a link to our Telegram channel. And if you visit our Telegram channel, there also you can find links to all the earlier lessons. Now let us get into our main discussion. And the topic is defining the curve when there is no HTF demand zone or HTF supply zone. Now the question is, in which situation a chart is not having a higher time frame demand zone or a higher time frame supply zone? So let us look into those scenarios. So we cannot find a supply zone in a chart in two scenarios. One is when a price candle is at all-time high. The current price candle is at all-time high. When it reached the all-time high, what will happen? So before reaching the all-time high, all the existing supply zones in that particular chart will be violated, and then only prices will be reaching a new all-time high. So because all the existing supply zones are violated, you will not find any more supply zones in that particular chart. And the second scenario, sometimes when price candles are near all-time high, it may not be exactly at the all-time high, near the all-time high. Say for example, in the previous candle, the price is at all-time high. And in the present candle, the prices came a little below the all-time high. What will happen? By the time a new supply zone is not created. To create a new supply zone, at least one lagging candle should be there. After that, at least one base candle should be there. And after that, there should be a leg out candle, that is a drop candle. So previous candle, the prices are at all-time high. Next candle, is it possible to complete a zone? It may not be possible. And another scenario, sometimes to create a zone, a new supply zone, at least a few base candles, maybe 1, 2, 3, few base candles prices will be moving, and after that a leg out will be created. This is second scenario. So at the time also when prices are near all-time high, there won't be any supply zone. And third scenario, important scenario, sometime what happens, without creating a supply zone, prices will keep on falling towards the nearest demand zone at the all-time high. That is also possible. That means without a supply zone, prices are entered into the nearest demand zone at the all-time high. How prices will be reaching? With a drop candles, continuous drop candles. A drop candle, drop candle, drop candle. Before that, there may not be any base candles. Let me tell you one scenario. Prices reached the all-time high with a rally candle. At least a base candle should be created in the next candle. But without a base candle creation, prices will keep on falling down with a drop candle until the nearest demand zone. In that situation also, you cannot find the supply zone. Prices entered inside the demand zone. Prices entered inside the demand zone, but there is no supply zone. So these are the different situations you will be seeing. That's why the second point says, sometimes when prices candles are near all-time high, you may not be able to find a supply zone. Exactly the same way, we cannot find the demand zone in a chart when a price candle is at the all-time high, all-time low. That is ATL. ATL indicates all-time low. Sometimes when price candles are near all-time low, that is also, in that situation also, we will not find any demand zone in a chart. Sometimes even prices reach demand zone near all-time high without supply zone. That is what I told you earlier. Exactly the same way. Sometimes even prices reaches the supply zone near the all-time low without the demand zone. And in general, the demand zone that is nearest to the all-time high is called as all-time high demand zone. In short, we call all-time high demand zone. All-time high demand zone means the demand zone near to the all-time high. Similarly, the nearest supply zone at the all-time low is also called as all-time low supply zone. All-time low supply zone means that supply zone is nearest to the all-time low and provide conditions also there. What is the condition? There won't be any supply zone. If you want to call a demand zone as a all-time high demand zone, there should not be any supply zone. Exactly the same way, if you want to call a supply zone as a all-time low supply zone, there should not be any demand zone. Always remember, all-time high demand zone means two conditions it should satisfy. First condition is that should be the nearest to the all-time high demand zone. Second condition is there should not be any supply zone. Then only you can call the demand zone as a all-time high demand zone. Similarly, if you want to call any supply zone as a all-time low supply zone, again two conditions should be satisfied. The first condition is the supply zone should be nearest to the all-time low, and the second condition is there should not be any demand zone. And please also remember all these points we discussed so far, they are with respect to a particular time frame in a chart. Because these scenarios will be changing from time frame to time frame. For example, currently you are on the monthly time frame. In the monthly time frame, you have a all-time high demand zone. That means the demand zone is nearest to the all-time high, and on monthly time frame there is no supply zone. Is it clear? Okay. Now you go to the weekly time frame. Weekly time frame, there could be already a weekly supply zone. That means weekly supply zone is created. And also weekly demand zone is also there. But monthly time frame, there is no monthly supply zone. So that is the reason why always remember, in one time frame there is no supply zone. It doesn't mean all the time frames there should not be any supply zone. It is not like that. Sometimes in the higher time frames you may not find the supply zone, but in the lower time frames you may find the supply zones. Here the word higher time frames and lower time frames, whatever I am using, they are the normal English words, not our technical word HTF or LTF. Just the general English word. What is the general English word? For example, when I say monthly time frame, anything below monthly, any time frame below monthly, that is weekly or daily or 75 minutes or 25 minutes or 5 minutes, all these are all lower time frames. Say for example, currently I am at daily time frame. From daily time frame, if I am referring higher time frame, that means all the time frames above daily, that is weekly, monthly or quarterly or half yearly or yearly, they are all time high time frames. This is the general English word. But the technical word HTF and LTF you already learned, their meaning is different. So that's why I am giving you the clarity so that you will not get any confusion. So what I mean to say, when I am having a all-time high demand zone on monthly time frame, it doesn't mean in all the lower time frames there is no supply zone. Monthly there is no supply zone, but daily in weekly you may find a supply zone. Even daily you may find supply zone. Even the other time frames like 75 minutes or 15 minutes or 5 minutes also you can able to find the supply zones. So that's why whatever the discussion we had in this particular slide, this entire discussion is specific to a particular time frame. What is the first point I said? When a price candle is at all-time high, that means you have to understand the price candle is related to the monthly time frame, or the price candle is related to the weekly time frame, or the price candle is related to the daily time frame. That way you should get clarity, because this entire discussion is specific to the time frames, because the phase 2 training is completely based on the time frames. You should not forget that point. Why I am stressing? By this time you might have completed the phase 1 videos and now you are learning phase 2 training program. Phase 1 training we never talked about time frames, but phase 2 the entire discussion is based on the time frames. That is the reason why you should be, I want you to be alert always. All these discussions or all these points are specific to the charts related to a specific time frame. That's why you do not generalize. Do not generalize means when I say a stock is not having all-time demand zone or all-time supply zone, it doesn't mean the point is applicable to all the time frames. In any one time frame it is not available. It doesn't mean same point is applicable to the other time frames. No, that is wrong. In one time frame, there might be a candle at all-time high. When you look into the lower time frame, maybe the current candle might have been completed the all-time high, and K prices are coming below. That's why what you have to do, go to different charts and see. Monthly chart, the candle is an all-time high candle, but daily chart, the candle may not be an all-time high candle. That clarity you have to get. If you get that clarity, rest of your understanding is very easy. I wish I brought some clarity regarding this point. Now let us get into the examples. Okay, now the question is, before getting to the examples, the question is, then how do you find the location? Location means curve. How do you define the curve, or how do you define the location? When there is no supply zone or when there is no demand zone. So let us find the solution for these scenarios. And the first example is about the all-time high scenario. Now look into this chart. Assume this particular candle is at all-time high. It reached the all-time high. That means by the time prices reaches here, all the supply zones might have been violated. Whatever the supply zones are there earlier, they might have been violated. And finally, prices reached the new all-time high. From there, prices are falling down without creating a supply. That is one possibility. Now, how to define the curve? Is there any supply? Generally, how do we define the curve? We draw a vertical line from higher time frame, demand zone, distal line to higher time frame, supply zone, distal line. That is a D2D range line. But is there any supply zone? No. Then without a supply zone, how do we identify the range? We can identify the range even without there is a supply zone. That is from all-time high to the distal line of the demand zone, you can draw the line. This is not D2D range line. Now this is D2ATH line. That means distal line to all-time high range. So at all-time high, you just draw the horizontal line. First you identified the distal line in your demand zone. After that, you draw a horizontal line. This horizontal line is called all-time high line. Please remember, this is not the distal line. This is all-time high line. Now you need to define a vertical line between distal line of the demand zone and all-time high line. Something like this. Okay, now what is the next step? Can we define into three parts? No, you cannot define into three parts. Without a supply zone, where is the seller's area? When we get the seller's area, when there is a supply. Without a sellers, without a supply zone, how can you find the sellers? I mean, the seller's area, how can you find? In order to find the seller's area, there should be a supply zone. If there is a higher time frame supply zone, we know there will be institutional pending orders. Because there are institutional pending orders, we can define that area is seller's area. Now, without a supply zone at a higher time frame, how can you find institutional pending orders? There is no guarantee that there are institutional pending orders. When there is a supply zone, there is a guarantee that there are institutional pending orders in the supply zone. So that is the reason why without higher time frame supply zone, we cannot confirm there are institutional pending orders. But demand zone is there. That's why we can confirm there are institutional pending orders. Then without seller's area, how to draw the curve? So because there is no seller's area, now the remaining two areas are buyer's area and equilibrium. So people follow different techniques here for dividing this entire range into two parts. One part is identifying the buyer's area and another part is identifying the equilibrium. Is it clear? So that is the reason why one solution most of the people will follow is divide this entire range into two parts. The first part is buyer's area, that is low on the curve. And the second part is equilibrium, that is EQB, short name. And some people also follow a different technique. What they do, the high of the demand zone, till the high of the demand zone only they consider buyer's area and the rest of the area they consider as equilibrium. But I am not convinced with that argument. The reason is, see, if prices are coming down, if there is any new supply zone is created and prices enter into that, and it is recommending a sell order near to the buyer's area. I mean in the lower time frames, I am talking about the lower time frames. Higher time frame, there is no supply zone at all. In the lower time frame, that is LTF zone, that is our entry zone, assume when prices are coming down and in the lower time frame, it formed a supply zone near just before this HTF demand zone, and again prices go back to that zone. What we are suggesting? We are suggesting a sell trade. But sell trade near HTF demand zone is recommended. This entire area is buyer's area. A lot of buy orders will be there. It is dangerous. So that's why we have to give some width. So that is the reason why divide into two parts. In this area, if any new supply zone is created and prices are falling, came down and again went to the supply, maybe we can take a short order. Further again, after that prices will go down. We have a convincing reason. So that is the reason why I am always favor to this solution. Divide this entire range into two parts, and the first part is near to the demand zone is buyer's area, that is low on the curve, and remaining part is equilibrium. Equilibrium is favorable to both buyers and sellers. That is sellers for lower time frame, LTF, lower time frame, the technical word, LTF. Because higher time frame there is no supply zone, but in lower time frame, that is LTF time frame, there could be a supply zone. So this is how we provide the solution when there is no supply zone at higher time frame, that is HTF time frame. Exactly the same way, you can also provide solution when there is no demand zone, when prices are at all-time low or near all-time low. Okay, now here prices are moving down. So in this scenario, is it advisable to go for short trades? No, it is not advisable. Now prices entered into this zone and again moving towards the all-time high. Can we take a buy decision in this near this candle? If there is any lower time frame zones, yes, we can take. Equilibrium, again, can we take a long decisions at equilibrium? Yes, equilibrium we can take long decisions also, you can take short decisions also. It is in favorable, but direction also plays the major role, how prices are traveling. That we will discuss in our next chapters. Okay, this is the next scenario. What is the next scenario? When prices are at all-time low, when prices are at all-time low, that means we won't be having any demand zone. There is only existing supply zones. So in this example, we have a supply zone. The price is at all-time low. So how we provide the solution? First, we draw the distal line at the supply zone, horizontal line. Similarly, we will also draw a horizontal line at all-time low. This is all-time low. This is the all-time low price line. Now between the all-time low price line and the supply zone distal line, you can draw the straight line as a range. Now divide this range into two parts, two equal parts. And the part near to the supply zone, we call it as a seller's area, that is high on the curve, HOC. And the remaining part is called equilibrium, EQB. So this is the way we can provide the solution. Hope you got the clarity. At the time when we don't have demand zone or supply zone near all-time high or all-time low, this is the solution. From all-time high or low to that distal line of your zone, you divide into two parts. At all-time high, we won't be having a supply. At all-time low, we won't be having the demand. That is the point you should understand. Now your decisions will be based on this location, whether to buy or sell. So in the next session, it is a practical session for all-time high and all-time low scenarios. So especially HTF zone, we have to identify the curve. So that means we have to identify the stocks at all-time high and all-time low. Now at present, overall market is at the all-time high, the entire market. So it is easy to find all-time high stocks. But I am not sure which stock is at all-time low, or are there any stocks at all-time low. So what I do, I will take the help of our NeoStock software to find if there are any stocks near all-time low. So if I find any stock, I will be able to show you the example at all-time low. But all-time high, we get plenty of the stocks now. So thank you for attending this video. Let us all meet again in our practical video. Thank you.